Hey traders, checking in on the stock market today. We had growth and tech sector pull back as we anticipate FOMC uncertainty tomorrow. We've got quad witching on Friday, and we've got some rising wedges and falling wedges to keep an eye on for an FOMC reaction. So the S&P 500 futures chart, another test of our 4-hour support line and another hold of it today. And I look at this chart and honestly, I look at this heading into the FOMC tomorrow, and we're going to print another 3 candles before then. And I say to myself, this is too easy. It can't be this obvious that we have a big rising wedge that's going to break bear on the FOMC reaction. And then I have to remind myself, the vast majority of people participating in markets have no idea what a rising wedge is. So it may look obvious to me or to a trader, but it is not obvious to the market as a whole. So I'm keeping a close eye on wedges. We've got a rising wedge on the S&P 500 daily time frame. We know what the cat rising wedge did, and I don't think that has any bearing on the broader market, but just an example of something that definitely caught a lot of bulls by surprise, as the bulls have been in complete control for an entire year, and then when this rising wedge broke bear, it just collapsed very hard and very fast. Speaking of which, daily inside bar today, watching for some bounce follow through to try and get going tomorrow. But there is a rising wedge there. There's a falling wedge on the VIX, which we will look at in just a second. And there's a potential rising wedge on the NASDAQ daily time frame, though that support is not close. Pulled back today, but again, support's way down here, and we could pull back significantly and still be holding it. So for me tomorrow, the FOMC reaction at 2 p.m. Eastern, the only thing I'm looking for, can bears prove anything, or is it business as usual? Those are the only 2 questions that I'm looking to get answered. And if the bears are going to prove something, it's going to be all of our sectors dropping at the same time on volume. And if that does not happen, it's business as usual as far as I'm concerned. So NASDAQ today, pull back. Let's go over the game plan for the morning first. So every morning I wake up, 6 a.m., hop on the computer, and establish my game plan. What am I looking for? And I don't do any of my planning the night before because things change overnight, and I do it in the morning. So I looked at QQQ pre-market, and at this point, 6:30, 7 a.m., and I said to myself, okay, bulls in complete control, but we didn't consolidate on the hourly yesterday, and here is where the charts are an aspect of my decision making, but it's also psychology. So if the bulls have been in complete control for 3 days in a row, and we've had limited hourly consolidation, and the FOMC tomorrow is a very clear unknown event as far as how the market is going to react, I would be taking profit. So we look for a gap up open into profit taking, and it didn't end up being a gap up open, which I was a little bit bummed about just because the pullback started pre-market. You can see this notable drop of, a dollar drop into the open. That gave us a top fishing level with the high of yesterday that we did reject from by 5 pennies, but I wanted it to be as extended as possible. Either way, looking for hourly consolidation on QQQ to start the morning. So how do I base my trade game plan around that? I, as a day trader, want to eliminate half of the equation before the bell ever rings. So I look at that setup and say, I am looking bearish on QQQ names, QQQ and related names. And if that setup does not come, then I'm not trading this morning. Because it's either going to be the setup I am looking for, and I'm only looking in one direction, and I know exactly what I'm looking for. And if that does not happen, I'm not going to scramble and try and shift my game plan and say, oh, well, maybe I should be looking bull. I just say, nope, I was wrong. I will eat my loss of being wrong, and that will be it for me on the morning. 5 little baby turkeys. So from there, what do we do? So game plan. I want to see the weaker names. I'm not going to short QQQ. I could, but I want to know who is going to be bearishly correlated to QQQ and pull back more. So QQQ, anything above 340.46 is an hourly high or low. So I'm looking for hourly consolidation today, but I am looking for the hourly uptrend to remain intact. So I want to see a name that is weaker than QQQ that's going to see more downside, does not have an hourly uptrend intact. So I look for who is closer to breaking the low of yesterday compared to QQQ. And I say to myself, Tesla, and XBI. So looking for hourly consolidation in QQQ tech names, though lots of space for a higher low on the hourly. Patient bears will be watching for hourly lower highs on XLF related name bounces, and just anticipating that XLF is going to bounce if QQQ is going to pull back because they've been so inverse to each other. Tesla will be a top bear watch for me if QQQ sees hourly consolidation. Anything under 635 is a daily lower high, and losing the higher low everyday pattern, which it has had for 7 days, would mean a daily lower high and continued equilibrium is shaping up. So Tesla, at that point in time, pre-market, while QQQ is up near the high of yesterday, Tesla is down 1% plus under the high of yesterday. So I know it is not positioned well to break the high of yesterday resistance if there's any correlation, or I should say any consolidation on the Qs. So the daily setup that had me scouting Tesla bearish is anything under 635.59 is just a daily lower high. And if we break the low of yesterday, 609.18, that daily lower high is set and the equilibrium continues to tighten up. So the bears showed up and we broke support of 609.18 and we followed through with solid downside straight from the open. It's a red Maribozu. The bears controlled the entirety of the day, closed at the low, and now we're watching for a daily higher low compared to 571.22 in this tightening equilibrium. Potential that it's going to have to take until next week before we see a break of this tightening daily range. So that was one setup. Other setup, XBI also looking like the bulls are tiring a bit on the daily and could see daily consolidation begin if QQQ sees hourly consolidation. So we know XBI and Tesla are correlated to QQQ, but they were just set up a bit weaker. At that point in time, XBI was looking at the high of yesterday. We were a good bit under it, and we broke the low of yesterday, 135.89, and then dumped. And bears had huge follow through on that pullback. So it was recognizing bigger picture, what is the sector doing, and then finding the individual names who are not positioned well comparative to that sector. And that is how you establish a trade game plan. I didn't take either of those two trades as I was doing the live stream and I was behind on ticker requests, and I didn't take a trade until I'll go over my individual trades. I did short QQQ, but I'll go over those at the end of the video. Back to regular technical analysis. Just wanted to give you some insight as to how I established my game plan. I wasn't looking bullish on anything today. I did look bullish on AMC eventually, but to start the day, that's my game plan. QQQ consolidation, names that are not positioned well for it, looking bearish. That's it. If I'm wrong, not trading on the morning. IWM. Lower high on the daily, broke daily support with zero follow through. 228.71 broke by 23 cents. So bulls are still holding on just fine, but if we were to see, it's currently a weekly inside bar. If the weekly inside bar breaks bear, if we lose 227.25 support, the weekly equilibrium will continue to tighten up. And actually, I take that back. We already broke resistance, but we haven't broken the all-time high. So it's not a weekly equilibrium, but it would be a failed break of the all-time high. This looks like Bitcoin's daily chart. At the top. Equilibrium bull break. We broke both levels and then rolled over. And this would be what's standing out of my mind. The similarities with IWM's weekly is IWM right now would be right here under this resistance still. But looks a little bit like Wyckoff distribution on IWM. But bulls keeping the daily EMA 12. Keep it simple. If daily EMA 12 is holding, bulls are just fine on the daily chart. Financial sector started to get a bounce going today. And we've got an inside bar. If the inside bar breaks bull, we scout a daily lower high, anything under 38.18. Bigger picture, we're scouting a weekly higher low on XLF. And again, I went through the scenario yesterday of how growth names weekly consolidation could play out with the inverse relationship for XLF. I'm not going to repeat it. Click that video yesterday if you want that info. If the inside bar breaks bear, we're looking down at 36.59 as the next support level. And today the bulls took their sweet time, but it was a falling wedge. And honestly, because of how inverse we have been between QQQ and XLF, I didn't have confidence as a QQQ bear until XLF really started to get this bounce going. And it was a 5-minute falling wedge, bear break by 4 pennies into a bounce, bear break by 3 pennies into a monster bounce. And QQQ was not easy as far as making a bearish entry because it dumped first thing. Great, it's easy. V-shaped to a new high of the day, rejected from the high of yesterday, and then finally rolled over. Healthcare, still a possible daily bull flag. So again, one way, I think it was yesterday's video where I talked about how I play flags. And if I think this is a daily bull flag, I make an entry. My stop is real tight, 123.78. If that level breaks, it's not game over for the bulls on the chart, but my thesis of it being a bull flag will be wrong. So I want to stop out with a very small loss. And if I'm right, it's a potential cup and handle like pattern to see a new all-time high. Depends on the FOMC reaction. Bullish reaction, we're going to test all-time highs. Bearish reaction, and it's not going to be a daily bull flag. Biotech sector, big pullback. We are watching for weekly consolidation on all growth names. Some of them are already seeing it happen. We're now watching, are the other names going to act as laggards on the way to the downside? So not nearly enough information on XBI at this point because it's still a healthy daily uptrend as far as I'm concerned. I would really call anything above 125.08 a daily high or low. If XBI is going to roll over into weekly consolidation, in my opinion, it'll set a higher low, fail a lower high, and then confirm a daily downtrend. Unless the FOMC gets ugly and we drop real hard. But even then, we're still so far above that last daily high or low. SMH. So bull break yesterday. Lack of follow through at this point. All-time high. This is the weekly equilibrium that I confused with IWM. It's still a weekly equilibrium. Anything under 257.54. So if we lose the daily high or lows, our weekly lower high is likely set. We can keep it simple. EMA 12. No red flags for the bulls if daily EMA 12 is holding. If daily EMA 12 is lost, probabilities of a weekly lower high and continued weekly equilibrium will increase a bit. So aggressive bears have clear top fishing levels to make entries against. And say I'm long, again, hedging. Let's say I'm long NVDA and I've got big semiconductor exposure in my portfolio. I can short SMH and put my stop over the high, and I call that my insurance play, where all it is leaving profit on the table if I'm wrong. If I'm wrong, I stop out with this much loss, and my long portfolio positions keep going up and making me money. And granted, it's a little bit less money than if I didn't take that short, but if we reject from this resistance and pull back on the weekly time frame, I can offset a lot of the downside that my long positions will see. Solar sector, daily consolidation, anything above 74.88 is a daily high or low. And again, we're just watching for losses of the daily uptrends to indicate tops of the weekly bounces on our growth names. I still have some ARC. I did exit some last week. And I will exit ARC when the daily high or lows are lost because I'm not going to hold that position through weekly consolidation. The bounce was very significant, 25% or so, a little bit less, 23. And I'm not going to sit through a 10% pullback trying to find a weekly high or low. I can always re-enter if I want. But one day is not enough for me to bail on the remainder of my position. MSOS, so just forgot it in yesterday's video, but obviously the bears are in complete control. And I've talked about it recently in the past, but the bears have everything working against them right now. And in the absence of a news catalyst, we are positioned very, very poorly for the bears and very poorly for the bulls and very well for the bears. Why? Because MSOS does not go up when SPY goes up. Clearly looking at this chart, doesn't matter that SPY is at all-time highs, but it goes down when the broader market goes down. That is your ideal bearish correlation. It can't get any better than that for a bear. So I want 38.26 support to hold. I want the broader market to stay strong for another week plus. I want MSOS to bounce, and then I'm going to look for a daily lower high bearish entry, knowing that any consolidation in the broader market is going to drive this down. So 38.26 and 37.56 key supports. Bears in complete control. Bulls have proven nothing over the last 3 months. And we can see another leg down. Again, even if SPY gives us a weekly bull flag of consolidation, MSOS is going to drop down to lower lows, and there's not a whole lot of support established on the way up. So this is your ideal bear chart as far as its relationship with the broader market. The VIX broke this 4-hour falling wedge bullish, but it's a breakthrough time. It's not a breakthrough price action. If it were a breakthrough price action, it would be very clear and convincing. This is just a little sideways, little bit of upside, but that's not a bull break for me. And again, I could always just adjust this trend line to say it's not a bull break. It was better where it was, but it's the FOMC. FOMC is going to either have the bulls break 18.29 for a convincing bull break, or the market bulls will come out and we'll be looking back down to the 15.04 support level. Rising wedge on the S&P 500 futures, falling wedge on the VIX. Let's see what the FOMC reaction is tomorrow. The dollar broke daily resistance with no follow-through. If we break the low of today with no more follow-through, it is a clear red flag for bulls, keeping the weekly bear flag alive. And the dollar is going to significantly react to the FOMC tomorrow as well, in my opinion, as will the metals. So the FOMC tomorrow is going to dictate a lot. Wedges on the S&P 500 and the VIX, and it's either going to make the weekly bear flag in the dollar more likely or less likely, depending on the reaction. Gold failed the 4-hour trend change. Top of the bounce, higher low, lower high, bear break. So the bears can still see follow through on this confirmed daily downtrend. All depends on the FOMC. We will be looking for a weekly higher low regardless, but this is going to determine, is it a weekly bull flag or not? It's going to help determine. Silver is still stronger. We held the low of last week. It's still a multiple weekly inside bar pattern. Still much stronger than gold. If silver were as weak as gold, we'd be down in the 26s right now. And the miners failed to change the hourly trend. So rejected from the high of yesterday first thing. Held the low of yesterday with a double bottom. So pretty much a double top, double bottom. Daily inside bar. Oil bull still in complete control. Breaking above resistance or attempting to. As long as 70.72 holds on the 4-hour chart, the bulls keep their complete control. Very strong oil bulls. 4-hour uptrend, simple guide. Natural gas daily consolidation underway. So we broke resistance of 3135 into a daily pullback. Anything above 2959 is a daily high or low. So the bulls have tons of space to work with to maintain this uptrend. 4-hour chart, solid drop. Next time we bounce, we'll be scouting a 4-hour lower high. But the daily uptrend easily intact still at this point. So tomorrow's going to get interesting. I did short QQQ. So I saw the bounce to the new high of the day, and then I saw this pullback, and I entered bearish on this 5-minute bear flag. And I entered SQQQ. And here's an example of again, something that is really hard for beginner traders to do is jump right back in a trade after getting stopped out. And when you're experienced, as long as the initial loss is small, it's very easy to do. So on SQQQ here, I'm just going to use the QQQ chart, but I saw this bounce right here. And then we started pulling back. I said, that looks like a 5-minute bear flag. So I did my play. Entered bearish, put my stop above the high. Tiny risk. If that high breaks, it is not likely a bear flag. It is less likely to be a bear flag. If that high does not break, it's a bear flag and we're likely going to hit a new low of the day. So I'm in my short. I stop out on this wick. And as soon as I stop out, I watch the price action and we start fading right back down to the low. So I jumped right back in short. And again, the only reason I was willing to be so aggressive doing so is my first loss was something like a 15% day loser. So even if I was wrong and then wrong again, I lose maybe a 40% day maker, which is absolutely nothing. And again, when your loss is that small and you have the confidence that you can make that back with your eyes closed the next trade, then it is a lot easier to jump right back in. So jumped right back in the short, held it, and let the day play out. 15-minute downtrend was my guide, and EMA 12 resistance was my guide. Every bounce just a 15-minute lower high. At the end of the day, I exited half of my position right before I was going to go live, and then exited a little bit more into the end of the day. I am swinging a little bit more because now I have a position where my break even is way above the high of today because I took a lot of profit. So I exited maybe 65% of the position, 2/3 we'll say. So I can't lose on this trade unless there's a massive gap up. So I may hold this position through the FOMC. Just set my stop at break even on the trade. And if FOMC is a bearish reaction, I have more short exposure. And if FOMC is a bullish reaction, I stop out of this trade break even. So that's my style of taking partial profit to drop cost basis, drop where my break even is, and allow this kind of play. You know, if you asked me when I entered that trade, are you going to swing this bearish? I would have said I have absolutely no idea. Let's see how it plays out. But because of how it played out, and because of the rising wedge in the S&P 500 and the FOMC, I'm going to go into the FOMC with a little bit more bear exposure because it is risk-free bear exposure, essentially. So that was one trade. What else did I trade today? Did trade a little QQQ bounce. And this was an example of me not wanting to exit my SQQQ position because it was based on a larger time frame. 15-minute was the smallest time frame I was looking at, but I was looking at QQQ and I saw this 5-minute bear flag confirm with 0 follow through. So I longed QQQ while being short. I should say I longed QQQ while having SQQQ open. And again, it was a 5-minute bear flag that confirmed with 0 follow through, and I went in very, very large. Why did I go in very, very large? Because I'm trading QQQ and there's a lot less volatility there, and I'm bottom fishing the low of the day. So if that's going to be a 5-minute bear flag, right now we're on the 2-minute time frame, but if that was going to be a 5-minute bear flag with no follow through, and we're going to set an hourly higher low, which is what I was looking for, then I can enter big, and this just looked like accumulation to me. So I made an initial QQQ entry, entered more, and the whole time I just put my stop right under 342.07. And this bounce hardly got any follow through, but I built a large enough position that as this break took place, I exited, 30% of my position, and then sat through this, then I exited a little bit more, and then stopped out of the rest. So that ended up being a decent trade, even though it was only a 60-cent bounce on QQQ, because I built a large position with a very tight stop. The vast majority of my entries, I guess my average was probably 342.28. Maybe I'm risking 23 cents to the downside and ended up getting almost double that to the upside. So very small move overall. If it was the hourly higher low and we got follow through, it would have been a multiple day maker trade because of the size, but it wasn't. And I was wrong. It wasn't the hourly higher low, and I was wrong and made money, which is my favorite way to be wrong. Other than that, I did trade AMC a good bit today. I did trade the 5-minute higher low on AMC. And then there's one more I remember now. So AMC, I traded this 5-minute higher low. Why? EMA 12. Love that guide. Low of 61.70. Next candle held it by 3 pennies. Great, I'm in. Stop under 61.70. If that's our 5-minute higher low, I nail it. And if it's not, I stop out with a acceptable loss. Equilibrium formed. Exited partial into the equilibrium. Stop under the low. Stopped out. Didn't see continuation. Wrong on the trade and made money. And the last one was DKNG. This was another really good oversold bounce right at the open. as extreme to the downside as possible heading into the bell ring. And it was a short report that did that. And again, I was too distracted right first thing in the morning to be able to trade that. That is right up my alley as far as bounce style or trade style. But a little bit too distracted. Hope some members got that one. And I entered bearish. So bigger picture, great bounce. We've now bounced over 10%. And I know I'm looking for an hourly lower high to be the result of that bounce. So I'm looking bearish. So we hit the high of the day, 5-minute higher low, and I entered bearish, top fishing the high at that point of $49. Put my stop above 49, gave a little bit of wiggle room. Unfortunately, it was enough wiggle room. I gave 10 cents of wiggle room. And we broke resistance with 0 follow through. Bounced around sideways and then rolled over. And so that was another one where I didn't stop out. I exited half on this pullback. Put my stop above the high of the day for 0 risk. And then I got back to the computer after a lunch break right about here. And locked it in. Why did I exit everything? Because an hourly higher low is then the most likely scenario. And then we just traded sideways from there. So all in all, pretty good day. There were, I took a bunch of AMC trades. So there were definitely some break evens and some small losses mixed in there. But only the winning ones are sticking out in my brain. But definitely no notable losses day trading today. Swing trades were down as far as growth pulling back, financial sector bouncing, but I helped offset that by my SQQQ position. So I will head into the FOMC with a little bit of XLF short and a little bit of QQQ short for the possibility of that rising wedge on the S&P 500 breaking bear. And we'll see how it goes. Have a good rest of your day. Do good things. Feel free to ask any questions, and we'll see you tomorrow.
Roses, pokeberry, fig, snapdragons, rogue squash. Past couple days I've been getting the first raspberries and blueberries. Strawberries are done. Some early fig fruit. Yarrow knocked over by the rain. Some lilies. These lilies have yet to flower. Don't know what the purple is. But there's black-eyed Susans in there as well. Wild lettuce. That's 6 feet tall at this point. And the princess tree. Echinacea, bee balm, milkweed with a butterfly, really like the milkweed flowers.